refuse the dollar for payments. This is a very big event, and I think it might actually have already begun. I think we're being lied to, Elijah. I think a lot of ships, like around Long Beach, California, I think a lot of ships are circling and not coming to port because they're on instructions. We don't want any payment in dollars anymore. And the story we're told is that there's a dock worker strike, or the longshoremen are uneasy about certain working conditions, and they don't want to say, by they I mean those in control of our press, and the ones in control of the press are the same ones who are involved in narcotics, the same ones involved with the war machine, the same ones involved with rescuing the big banks. So it's all the big, we call it banker cabal, the syndicate. I call it banker crime syndicate, but it's more than that because it's the press too. It's also big pharmacy companies that have a bad habit of putting in the actual virus in the vaccine. I guess that was an accident. Laced virus is what I'm talking about. So we're told that the ports are having a lot of difficulties because of the workers, because of contract disputes, and all kinds of worker conditions and this and that, when I believe the big story that they don't want to tell is the shippers from Asia and emerging market nations don't want the stinking dollar anymore, and the reason is that we're printing it to cover the U.S. government debt. Now, these nations who send a ship loaded with, say, 2,000 containers on the giant ship, I've seen them go through the Panama Canal. They are very impressive. And usually they have, Norway markings or Panama markings or the Liberian. That effect went away a long time ago. They just didn't have the right standards. But when these containers are loaded and the companies want payment for their hard work to make car parts, to make television sets, to make stereos, to make Apple iPads, to make whatever that come to our shores. They don't want the dollar anymore because we're printing it to cover our debt, and we're printing it to cover the bad bonds that Wall Street owns. So you ask what event might cause, say, generally China and the East to announce their currencies are backed by gold? It could be a worldwide revolt against the dollar, which creates a vacuum in need urgently to be filled by a legitimate currency, not an African currency like the dollar. And I think the process is making tremendous headway recently. A number of nations are just lining up, sorting out their gold hoards, their giant vaults of gold, to back their currency. And what they're waiting for is some kind of a word that they're not going to get bombed by the U.S. military for their efforts regarding a solution.
Now, moving to the next viewer's question, this one is from Jeffrey Morris from England. He asks, how might the exchange stabilization funds of the nations forming the SDR basket of currencies behave as China incrementally contributes to the revaluation of gold? In what ways, if any, does being part of the SDR affect China's mutable policies?
Well, first of all, I don't believe the IMF has an exchange stabilization fund. That's a U.S. government Department of Treasury market rigging $1 trillion fund. Okay? So when China is included in the IMF special drawing rights basket, they join the dollar, the euro, the yen, and the British pound. So now add to that list the RMB. It's kind of an odd question. I'm going to change it in a way. I'm going to change the question for what is the effect overall of being part of the SDR, which is the second part. But and regarding China's mutable policies, I think what he might mean is what kind of active policies that are changing and working towards solution. how will that all be affected by China's inclusion in the IMF basket of currencies? Well, first of all, what does it mean to be included in the in the IMF basket of currencies? What does that mean? Well, it means that if there's a fund to create for, say, rescuing Bangladesh or aiding, say, Thailand, the money is apportioned according to the percentages in the basket. So the contributions will come in part from China and less so from the United States. So the money comes in from the 5 sources. Okay, that's the source. But there's another side to this. The banking systems of the world. I like to use the example of South Korea. It's one of my favorite examples because they're a powerhouse, but they're not a giant in Asia. They're just strong. They're not the leader in Asia. China and Japan are. But South Korea has a savings account. The savings account operates as bank reserve capital, and most of it is sitting in the form of treasury bonds. But they've also got ratios that conform to some extent with the IMF basket. So what you're going to see after China joins the IMF SDR basket is banking systems across the world are going to shed treasury bonds, shed euro bonds, and add Chinese RMB bonds. Okay, so the inclusion in the IMF basket means that the whole banking system across the world is going to change and tilt more toward China and move away from the dollar a little bit. And the contributions will come from those 5 countries, less so from the United States. But any contribution that comes to the United States comes from a printing press. It's not from our savings, so it's part of the problem. The printing press, I mean, we've got a whole chapter of economics, and this is like second-level economics, like 201. Pure inflation is deadly to capital. And we've forgotten this. We've forgotten it. It's passé. Oh, no, Jim, you're not modern anymore. The printing money like that sustains the economy and finances deficits. Why do we have deficits? Because we did that for the last 20 years. Now you want to do it more. We're accelerating the exact policies that destroyed our economy to rescue from the effects of what we've done in the same vein. Okay, I got off course a little bit, but to Jeffrey Morris of England, the IMF inclusion will mean much more internationalization of the Chinese currency and set the stage for their gold currency in the RMB. I think that the Russians and Chinese are going to come out with gold currencies.
Now moving to this next viewer's question, this one is from Cole, and Cole is wondering, how do we know that the 2 rounds of Scheiss dollar devaluation you speak of will have happened, and that it's then safe to liquidate some precious metals into the new currency for use in other investments?
How will you know when it's time? You'll know that most Americans are carrying pitchforks. If it's not to be a recognizable event, then you won't have a pulse. You'll be reading in the news that the entire economy is upside down, and most people are wondering, whose fault is it? There'll be all kinds of questions about supply chain disruptions and how do we fix it. Then there'll be questions about whether the United States is going to follow the same path as Venezuela into anarchy. Don't worry about questions like this. Anyone who asks me a question, well, when should I liquidate my precious metals, or how much should I liquidate and when? I say, why are you worrying about that now? We're not there yet. That's like saying, I just got out of college, but I want to plan my retirement. No, you don't buy the lakeside cottage until you've worked for a few years. If you haven't worked for a few years, you're not ready. You haven't endured the battle. This is a war to unseat the king dollar. The king dollar and his court. The king dollar and its terrorism. It's terror on capital, and it's terror on nations that don't want to use the dollar. Okay, when the time comes, it's going to be a few years. So, why don't you use those few years to continue studying instead of planning to liquidate when we're not there yet? We don't even know what new currencies have been announced. So you can't say, I'm going to go into those currencies. That's my plan. They don't even exist yet. Continue to study. Stay alert. Look for the new gold currencies that are coming. I'm told that there might be one from Russia, another from China, another from Germany, return of the Deutschmark, gold-backed Deutschmark. The Voices called it the Nordic euro at times, but it'll be adopted by Central Europe. Just study what's going on in the developments for gold-backed currencies. Study the development for adaptations of the dollar into an international dollar, and then a separate newly launched domestic-only dollar. Follow the developments, because it's not just going to be China, Russia, and Germany. Switzerland might issue a gold currency. Mexico might issue a silver currency. Australia might issue a gold currency. Lots and lots of nations are going to come forward, and what I believe is create a critical mass where the percentage of global trade that they're involved with will be on the order of two-thirds, like 65 to 70%. Because only if it's a critical mass can it actually work. Then what the effect would be is that the United States and all of its fascist allies will be in a club, still devoted to the dollar, still devoted to printing money instead of working, instead of producing, and they're going to be isolated. Unless the East has a critical mass, the West behind following the dollar will not be the minority. But if the East following China is the majority, the West following the United States will be the minority and be isolated and be therefore forced to come up with a legitimate asset-backed currency, and the best form is a gold currency. I'm told that a lot of nations that have asset wealth, resource wealth, they're going to be engaging in gold swaps with China. Take, for instance, say Chile. This is a good example. They're just loaded with copper. They might make a lease for copper output and copper in reserves for Chinese gold, and that Chinese gold will be used by Chile as their entry for some form of a South American gold currency. And it might come out of Panama. Panama is a real big financial center of Latin America. I've been there. I spent 90 minutes just walking a long, long way. I got tired legs, but it was fun. And I was just looking at all the banks. And there were dozens of banks I didn't recognize. I wrote their names down, did a little checking, talked with some friends, and I learned that they're Colombian banks, Argentine banks, Brazilian banks, Mexican banks, European banks, Spanish banks, Portuguese banks, Italian banks, German banks. You don't have any of that in Costa Rica, but you do in Panama. Panama owns 250 tons of gold and 86 million pounds of copper. Now, if you don't think 250 tons is a lot, you're dead wrong. 250 tons for Panama, with the U.S. being 100 times larger, that would be the equivalent of Fort Knox owning 25,000 tons of gold. And Fort Knox had around 8,500 or 8,200 tons. So Panama has 3 times as much gold per capita compared to Fort Knox in the United States. Panama's ready for a gold standard in their currency. And, we've got so much U.S. government narco money in their Panama banking system that they're having a hard time moving away from the dollar. But, consider also Panama's 86 million pounds of copper plates. This is a result of 30 or 40 years of mining in the southern hills of Panama, near the Colombian border, where the royalties were not paid in cash. They were paid in copper plates, which are now sitting in Panama government warehouses. So it could be that Panama will post that much of that copper plate reserves and make a swap with Chinese wealthy families for gold. And that way, Panama might actually be able to put forth a Central American gold dollar, gold-based dollar, for use widely in all Latin America. And maybe what they would do is invite Chile and Ecuador and Brazil to post some of their gold and be the Latin American gold central bank. So this is how the evolution will come, Elijah, and I think we're seeing some good progress in these directions. The trouble is they've got these proponents need to avoid being murdered by the U.S. government.
A lot of viewers have asked this similar question. What do you see happening to debt such, as existing mortgages, credit card balances, and car loans in the coming reset you speak of? And a lot of people have talked about how all that debt could just be wiped away. And some people are asking, well, if that happens, then, so first of all, do you see that happening, just all the debt being wiped away? And the second part is, if you see that happening, then why shouldn't people then just rack up a bunch of debt before the reset occurs?
Do I think it'll happen? Hell no. I don't live in a fairy tale world. I live in a real world. There's a great precedent, Elijah, and I remember it vividly. Remember where I was living, where I was watching it on the news. It was during the Clinton administration, around 1993, 1994. It was the Mexican currency problem. They called it the tequila crisis, Mexican peso crisis, the tequila crisis. And what they did was, I don't have the exact figures, but I think it was something like a 15 or 20% devaluation of the Mexican peso. Okay? Now, it was very interesting to see what did they do to the consumer loans, home loans, and general debt structure that was saddled upon the Mexican public. Well, let's just say for argument's sake the peso went down 20%. What they did was they increased all the loan balances by that same amount. Okay? The banks run the governments. Okay? The elites own the banks. For instance, when you had the financial regulatory bill in 2009, following the Lehman incident, at first the congressmen were writing the financial regulatory bill. Eventually, it was Goldman Sachs and Citigroup that wrote it. Why did they write it? Because they paid off the subcommittee run by Barney Frank and William Dodd, the Dodd-Frank team. They got bought out. They got paid off. They got bribed. And Barney Frank retired afterwards because he had a lot of slush money sitting on the side, I'm sure in some kind of a Cayman Island bank account that's not going to be investigated because he's one of the good boys. So the financial regulatory bill was written by the bankers. So right now the U.S. government policies continue to be written by the bankers. Do you think the banks are going to allow a new dollar to be launched that will instantly put $1 trillion hole in the banking portfolios? I don't think so. Do you think instead they're going to raise your debt levels to make you more a debt slave because they can? Hell yes. The debt balances, I think, are going to be increased, and they're going to say, in order to conform with their previous value before devaluation. And there'll be a lot of hue and cry, and maybe a few people will raise pitchforks, and maybe they will be shot dead.
This one is from John from Georgetown, Texas. He asks, do you think disabled vets will lose their pensions alongside Social Security, IRA, public and private pensions, and the wipeout of bank accounts?
Well, I don't think they're going to lose all their pensions. I think they're going to be forced, any pension funds are going to be forced into special U.S. Treasury bonds. If we have a new dollar that's launched, there'll be two problems for it instantly. How does the new government debt of $1 trillion a year get covered? And I think it's going to be covered by forced pension fund contributions into the special U.S. Treasury bond. So they, by force, by pure fascism and its force, they might cover the federal government annual deficit and debt. But they're not going to be able to cover the trade deficit unless we reindustrialize and start exporting more. That's why we're going to get devaluations. But the pensions, if you take a look at the Central States Pension Fund, right now there's a huge uproar going on in central states of the United States. These central states have a lot of Teamster union contributors. Okay, there are a lot of truck drivers in this pension fund. And what they've been told in the last few months is that they have at least a 50%, that's 50, at least a one-half cut in their pensions. And they're desperate. They're desperate. They're down to 2.5 to 3 contributors per beneficiary. In other words, there are 2.5 to 3 workers contributing into the fund, as there are people on the pension drawing from the fund without work in their retirement. A normal ratio is 10 to 1. So they're a long way away from 10 to 1 in the normal equilibrium-based system. Now, also, what is aggravating these pension funds? It's the 0% that Wall Street likes, that Wall Street calls stimulus. The 0% that Wall Street banks like is used for them to make money without working and without lending to businesses on their bond carry trade. The same 0% depletes the pensions. Hooey. It's not just pensions that are being depleted, it's the insurance industry, but that's not the focus of the question. The insurance industry is seeing its nut decrease, and therefore they're having to raise insurance rates. Okay, but Joe Sixpack here is struggling. I think we're going to see Social Security benefits get cut by 2 to 3-fold. Now, this is kind of funny, but I'm eligible for Social Security right now. But I'm working for a living. I'm writing a kick-ass newsletter. Okay, I'm having fun. I'm working, but I could collect Social Security instead. I don't know. It's all very messy, and the rules are weird. And I haven't looked into all the stupid rule changes that Obama, the Kenyan gay man squatter in the White House, has put in place. I'd rather not bother to try to keep up with what the Kenyan is doing and all his gobs and gobs of rule changes. But the guy who is dealing with his pension, seeing it cut in half, he's probably going to see his IRA forced into the government special treasury bonds. And if he was expecting before to see a continuation of any, say, interest on it, and let's just include annuities in there. Some retired people have annuities set up where they get income. Well, they don't have income anymore because the 0% that Wall Street likes, because they don't want any interest to pay on their derivative and casino games. You're basically going to see the older people, disabled. It's not just disabled vets. It's retirees like my father. I asked my father, Dad, are you ever resentful that you've got all these, more than 6 figures of CDs in the banks? Are you resentful that you're only earning 1.5% or 2% on them? He said, no, if it helps the country, Oh my God, I can't get through to people in my own family. I know a lot of listeners and followers and clients have the same problem. There's a tremendous amount of ignorance, if not stupidity, out there. Oh yeah, Dad, do you like all these wars? Well, yeah, they're defending our freedom. Oh my gosh, defending what freedom? No, they're defending the narcotics barons and their privilege, hardly the same freedom. Okay, so retirees and disabled vets, they're going to get screwed. They're being screwed. They're going to see their pensions shrink. They're going to see their annuities go down in income. They're going to see forced movement into special U.S. government treasury bonds. I just got another note. It's about the third one I've gotten from someone holding a Vanguard mutual fund. And they're changing the way that they're handling their cash reserves. If you sell a stock or a mutual fund within their family and it's not immediately put into a different mutual fund, it gets put into a U.S. government money market fund now. And the clients are starting to suspect that these Vanguard money market funds that sweep out all the cash that's idle, these Vanguard money market accounts might be a precursor for the special U.S. government treasury bonds. The Vanguard funds are typically the IRAs, 401ks. One's personally managed, other one is through your business. I think we're going to see before too long, before too many more months. We already saw a good indication. It was early 2015 or late 2014. Obama, the Kenyan squatter, put out a new rule that all the U.S. government pension funds, government workers who have a pension fund, all of it will be put into a special U.S. government treasury bond to help finance the government debt.
This next question is from Lynn from Vancouver. She asks, love to hear some discussion on the debtors of the global debt. Why no talk of uniting worldwide in a mass default and stick it to the central banks? Keep hearing talk of this debt crippling countries, but isn't this extortion? The so-called debt seems to get a whole lot more respect than it should all around. So did you want to discuss a little bit about this?
Yeah, well, this is, I hate to say it, but this is a real naive question. The bankers are in control. They pretty much run Washington and the U.S. government. They run the central banks, and they run the European Union Commission. They run everything, and they make all the rules. So you're asking, why are the bankers permitted to continue extortion? Because they're in control. Because they run the FBI. And remember, Occupy Wall Street was pretty prominent 2 years ago. They were treated like a terrorist organization. So why do they continue their extortion? Because they're criminals and they're in control. It is that simple.
Now, this next question is, you have talked about the Scheist-Dollar for a while now. Please explain when and how it will come to be. What are the signposts to watch for before this occurs?
I think an important signpost has already been seen, and that is ships on the west coast of the United States that do not unload. And remember, these same extortionists, the bankers who are in control, they also control the press networks. So when we're told that the shipping container vessels are not unloading, and it's because of dock worker strikes or difficulties with logistics at the port facilities, I think that's a bunch of poppycock. I think the problem is that a lot of the shipments are coming from Asia, are coming from China, and they're refusing to accept the dollar as payment, so they're not unloading their cargo. So how will the Scheist-Dollar come into being? I think it will be an issue of dock strikes and the Asian suppliers just saying, we're not going to continue. We're going to play a waiting game with you. We'll find other clients. We'll just wait and wait and wait until you launch a new dollar because your current dollar is corrupt. And you can't go printing money to cover your government debt like Zimbabwe does without consequences. So I think the whole issue, Elijah, for the launch of the Scheist dollar is going to be over shipping, imports coming to the United States, and satisfaction for the supply chain.
Speaking of importation, this next viewer wants to know which products are going to go up in price the most after a few rounds of 30% US dollar devaluations. In other words, which items are most reliant on their importation that we should stock up on them before the disruptions?
Well, it's not going to be food items or things that the U.S. produces. Although the U.S. does produce only 50% or 48% of its consumed food in the food sector, there's a lot of importing from Mexico and Chile. I remember years back I used to check it. Wow, look at that. We got tomatoes and pears, both from Chile. That's interesting. Didn't see that in the 80s. Didn't see that in the early 90s. But what do we import? I mean, this is not a complicated question. What do we import? Well, China supplies a great deal of housewares and hardware. You know, like things in your kitchen, towels. Many towels are coming from Pakistan, Bangladesh, Guatemala, Honduras. Okay, those are all going to be subjected to higher prices, but it's really not clear because I don't know what's going to happen with emerging market nations. You might want to make a distinction when it comes to import price effects of emerging market versus the rest of the world, like Japan, Taiwan, Singapore, and countries like that. Thailand, remarkably, when I was at Staples, Thailand supplied a remarkable amount of office supplies, you know, like little garbage bins for your office made of metal, just lots and lots of things. Little lamps, they were made in China, made in Thailand. Okay, so if it's more of an industrialized nation that does the export to the U.S., or if the imports to the U.S. come from more industrialized nations in Asia, expect the effect on the import prices to be greater. All right, that includes, say, Volkswagen cars. It includes all the Japanese cars, Toyota, Honda, Nissan. It includes all the German cars, Audi, Volkswagen, Mercedes, BMW. Expect all of them to have higher prices. But here's going to be the ugly little internal rub. I think Chrysler, among the U.S. car makers, I apologize for my voice. I'm getting over a head cold, and please don't send me dumbass emails saying, Jim, do you have a Coke problem? No, I don't. I have a small head cold problem. The insidious part will be like with Chrysler. They actually import a lot of parts for their cars from Japan, perhaps more than any of the other U.S. car makers. Lee Iacocca made the K-Series cars, but he also brought in Mitsubishi engines for those cars. Pardon me, I have to drink some water. All right, so we don't really know how much internal parts for a lot of U.S.-made goods, products, come from foreign vendors. And if they come from foreign vendors, they probably come from a more established nation, not an emerging market like Bangladesh. When I think of Bangladesh, I think of clothing, not high-tech things or medium-tech things like car parts and all the interesting little complicated electronics within a car. All right, so that's I think a rundown of what the vulnerability is going to be. In the last 15 years, we've seen a tremendous amount of influx of Chinese goods. When I bought a lamp, it was from China. I'm talking about recent purchases. I bought a replacement for they call them lavamanos here, a wash basin for my bathroom. Wash the hands or do my shaving of my face and beard. I was surprised. That's made in China. So porcelain goods, kitchen housewares, a lot of things are coming from China. I just bought a bath mat, one of those things with the little rubber things on the bottom that you put in your shower area to stop from slipping. That was made in China. These are all going to be subject to higher prices.
Now, this viewer is also wanting to know a little bit how to prepare and what kind of investment would be the best for the disruption. He asks, I can't afford gold. Will silver offer the same protection?
I think even more protection. When you think of protection, you think of two things, or at least I do. The first is, will it hold its value in the case of a currency crisis? And the currency crisis has already begun. It just hasn't hit a climax with the dollar. You go around to 20 nations of the world, and most of them will say, well, we're in the middle of a currency crisis. And that crisis is the fact that the dollar is going up and their Brazilian real is going down, or the Indian rupee is going down. So the two things are protection from currency decline that comes, and the second thing is, and this is again a silver advantage, if certain vendors, even in the U.S. economy, decide we really don't want to deal with the dollar right now, and we realize that this is a real problem for many of our customers, but we want silver coins. We don't even care if they're silver rounds, like from Turd Ferguson or some other silver doctor or whatever. Silver rounds are just stamped silver coins of 1 ounce type. And I think it's possible we might get to the point where vendors out there in the U.S. economy and in other countries will require some kind of silver payment. And it may not be a lot of them, but it could be enough to make a difference. So if you want to protect yourself against a currency crisis and you want to protect yourself against a vendor lockout, I think silver is going to be the answer. And just for a revaluation point, whatever gains gold has, like if gold doubles in value, I think silver is going to go up 5 to 6 fold. So if you see a gold move toward 4,000 or 5,000, you're going to see silver move up past $100. You're going to get toward $100, like $80 to $100. So silver is going to offer a lot more protection, Eli.
Walter Connor is wondering, what percentages do you personally allocate to gold and silver in your holdings? What would you suggest others allocate in percentages?
This has been a question on allocation, gold versus silver, for some time. Some have asked even if platinum and palladium should be in there. But what I have stated to clients, and this has gone on for 6-8 years, who've asked me, and I said, apart from your gold mining shares and all that, I would advise going 80% silver, 20% gold. I asked the Voice a year ago, what do you suggest for your very well-heeled, wealthy clients? And I thought he was going to say something like 50 or 60% silver. He said 90% silver, 10% gold. And I said, well, if that's the case, and you got these huge clients that are going 90% silver, how come we haven't had a silver default? And he said, well, how do you know we haven't had a silver default? There's so little silver out there. All they end up doing is they just look for other investments rather than forcing the issue and forcing a default. But also, Jim, there's a lot of hidden supply, and it's running low. I said, you mean like India and their secret silver supply to the West? And he said that and the Vatican to some extent. Okay, so the answer that I suggest is 80% silver, 20% gold, and the Voice likes even more silver. Let me give a supply and demand conclusion that drives this point home. Central banks own a lot of gold. They own no silver. Therefore, on the supply side, silver wins. Industry demands a lot of silver in consumption, not just for photography. And forget the digital argument. That's always going to be around, but don't worry about it. You have photography, you have medical uses, you have electronics, all kinds of electronics. You have cruise missiles that have something like 100 kilograms, 100 pounds, or I can't remember exactly. All these military weapons have silver components to them. There are lots and lots. The most recent has been silver in photovoltaics, solar panels, silver in pressure-treated lumber. Okay, the point is that industry demands silver and almost no gold. So, on the demand side, silver wins also. Therefore, I think that whatever gain you see for gold, you'll see triple that gain in silver.
This next viewer wants to know, do you think this recent gold price pullback could be so that the U.S. can lease the Chinese gold at 10 to 13% below spot? Do you think it was their last chance?
I don't know. And the problem with a lot of these different reunions and meetings and accords that are stamped out is that they're attended mainly by the elites, by the leaders of government. There's no reporting to the press. There's no lower-ranked congressional members involved. There's no just rank-and-file business CEOs involved. These are all deals cut by the criminal elite in the West with Eastern powers that may or may not be all that corrupt. I tend to doubt that the Eastern powers are anywhere near as corrupt as the West. I think the West is head and shoulders more corrupt. So there was this gold pullback. I tend to think, I was among those who thought, gosh, we're coming up on April 19th and the Shanghai gold fix is coming into view. And not only that, but the Shanghai RMB priced gold contract, futures contract, is coming into being, and we're likely to see a good move here. So we did see gold work toward 1,300, and we did see silver touch 18. But they both pulled back, and I'm quite disappointed. So I've had to scratch my head and try to figure out what's going on. And here's what I've concluded, Elijah, and you can't prove anything here. You have to look for coincident factors to support your view. I think what's happened is the Chinese are not quite ready to launch their gold-backed currency. The Chinese are not quite ready to do a lot more international trade settlement in RMB. The Chinese are not quite ready in getting their alignment with, say, 115 BRICS alliance nations to do trade settlement with gold trade notes. The Chinese are not quite ready in a lot of respects, and I've only mentioned a few. And besides, it could be that the Chinese made a conclusion, a decision. We can still buy more discounted gold from these fools in London and the West at ridiculously, artificially suppressed low prices. So let's put a little delay in. The other explanation that I have is everything's going according to Chinese plan, but we have no concept as Westerners of the level of patience and endurance for their implementing a plan that's more long-range than we have the capability to comprehend.
This question is from Eric. He asks, what do you think of holding precious metal miners, and do you see any big risks of nationalization?
Oh, I just don't like mining stocks, and there are a couple of overarching reasons why I don't like them. Because they're paper wealth. They're derivatives. And I know that's a very general term, and it's kind of an academic point, but let me bring this back down to earth. I have a very bad taste in my mouth from mining stock investments that I did in 03, 4, 5, 6, 7. We're talking about 5 years of investments where 2/3 of my investments were bad. And 1/3 of them were good. Only a few of them were big winners. Most of them were small winners. And I came to conclude these mining stocks are from companies that are just abusing their right to issue stock. In the same way the central banks are abusing their rights to print money which cover debt. The mining companies are printing shares to cover a prospective project. So out goes another 20% dilution for the stock, and you don't get any immediate payback. You just get a 20% decline in the stock price. And here's what makes it even worse. When a 1-year period or an 18-month period was up, a lot of the investors had the right to dump their shares. So you got a second dumping after any possible recovery that took place during that lock-in period or lockout period, lockdown period they call it. Okay, furthermore, mining companies are loaded with games. They pay their executives with stock options. It's sometimes uncertain when they can redeem their stock options and again dump them on the market. Not look for other buyers, but just dump them on the market so the loyal shareholders again took it up the hind parts. Furthermore, I found that a number of mining companies lied in their accounting. So I didn't really see that the mining companies were any different from Wall Street banks. Inflation, accounting fraud, executive privileges. The only thing that might have been missing was the $200 lunches that the Wall Street Bank executives take. I'd love to see. Remember Tyco had that executive with the expensive curtain for $250, and he was just hauled off and put in jail. He did some other things. That was why they went after him. When are we going to see any kind of scrutiny over Wall Street executive lunches at $200 a plate? It's standard. They spend $100,000 a year on their lunches because they cover their guests' plates also. Okay, I just don't like the mining stocks, and I know that there's a lot of talk out about how they're starting to really jump up and perform well. They might, but you don't know which ones are going to be loaded with fraud. You don't know which ones are going to be loaded with extra shares. You don't know which ones are going to have executives dumping on the market from their options. I don't know which are going to be the winners. I don't know which ones are going to be gobbled up by huge narco money that supports the bigger mines that go after, like just take for instance, Barrick might go on a buying spree, even though they're largely broken. They might get an infusion of $10 billion in narco money through the Bush family and go out and try to buy 100 companies. So if you have a nice little mining company stock, you might find that you're the owner of Barrick stock because they bought you out, and you're not going to have any upside potential at all. I'd much rather buy silver bars and coins because they're going up tenfold without the opportunity and potential for such fraud that I've described.
Hey everyone, thanks for watching. Click here to subscribe for free to be notified when the rest of this interview is released, or click over here to watch the full interview now.
So you can't say I'm going to go into those currencies. That's my plan. They don't even exist yet. Continue to study. Stay alert. Look for the new gold currencies that are coming. I'm told that there might be one from Russia, another from China, another from Germany, return of the Deutschmark, gold-backed Deutschmark. The Voices called it the Nordic euro at times, but it'll be adopted by Central Europe. Just study what's going on in the developments for gold-backed currencies. Study the development for adaptations of the dollar into an international dollar and then a separate newly launched domestic-only dollar. Follow the developments, because it's not just going to be China, Russia, and Germany. Switzerland might issue a gold currency. Mexico might issue a silver currency. Australia might issue a gold currency. Lots and lots of nations are going to come forward, and what I believe is create a critical mass where the percentage of global trade that they're involved with will be on the order of two-thirds, like 65 to 70%. Because only if it's a critical mass can it actually work. Then what the effect would be is that the United States and all of its fascist allies will be in a club, still devoted to the dollar, still devoted to printing money instead of working, instead of producing, and they're going to be isolated. Unless the East has a critical mass, the West behind following the dollar will not be the minority. But if the East following China is the majority, the West following the United States will be the minority and be isolated and be therefore forced to come up with a legitimate asset-backed currency, and the best form is a gold currency. I'm told that a lot of nations that have asset wealth, resource wealth, they're going to be engaging in gold swaps with China. Take, for instance, say Chile. This is a good example. They're just loaded with copper. They might make a lease for copper output and copper in reserves for Chinese gold, and that Chinese gold will be used by Chile as their entry for some form of a South and fuse the dollar for payments. This is a very big event, and I think it might actually have already begun. I think we're being lied to, Elijah. I think a lot of ships, like around Long Beach, California, I think a lot of ships are circling and not coming to port because they're on instructions. We don't want any payment in dollars anymore. And the story we're told is that there's a dock worker strike, or the longshoremen are uneasy about certain working conditions, and they don't want to say, by they I mean those in control of our press, and the ones in control of the press are the same ones who are involved in narcotics, the same ones involved with the war machine, the same ones involved with rescuing the big banks. So it's all the big, we call it banker cabal, the syndicate. I call it banker crime syndicate, but it's more than that, because it's the press too. It's also big pharmacy companies that have a bad habit of putting in the actual virus in the vaccine. I guess that was an accident. Laced virus is what I'm talking about. So we're told that the ports are having a lot of difficulties because of the workers, because of contract disputes, and all kinds of worker conditions and this and that, when I believe the big story that they don't want to tell is the shippers from Asia and emerging market nations don't want the stinking dollar anymore, and the reason is that we're printing it to cover the U.S. government debt. Now, these nations who send a ship loaded with, say, 2,000 containers on the giant ship, I've seen them go through the Panama Canal. They are very impressive. And usually they have, Norway markings or Panama markings or the Liberian. That effect went away a long time ago. They just didn't have the right standards. But when these containers are loaded and the companies want payment for their hard work to make car parts, to make television sets, to make stereos, to make Apple iPads, to make whatever that come to our shores. They don't want the dollar anymore because we're printing it to cover our debt, and we're printing it to cover the bad bonds that Wall Street owns. Inclusion will mean much more internationalization of the Chinese currency and set the stage for their gold currency in the RMB. I think that the Russians and Chinese are going to come out with gold currencies.
Now, moving to this next viewer's question, this one is from Cole, and Cole is wondering, how do we know that the 2 rounds of Scheich dollar devaluation you speak of will have happened? and that it's then safe to liquidate some precious metals into the new currency for use in other investments?
How will you know when it's time? You'll know that most Americans are carrying pitchforks. If it's not to be a recognizable event, then you won't have a pulse. You'll be reading in the news that the entire economy is upside down, and most people are wondering, whose fault is it? There'll be all kinds of questions about supply chain disruptions and how do we fix it. Then there'll be questions about whether the United States is going to follow the same path as Venezuela into anarchy. Don't worry about questions like this. Anyone who asks me a question, well, when should I liquidate my precious metals, or how much should I liquidate and when? I say, why are you worrying about that now? We're not there yet. That's like saying, I just got out of college, but I want to plan my retirement. No, you don't buy the lakeside cottage until you've worked for a few years. If you haven't worked for a few years, you're not ready. You haven't endured the battle. This is a war to unseat the king dollar. The king dollar and his court. The king dollar and its terrorism. It's terror on capital, and it's terror on nations that don't want to use the dollar. Okay, when the time comes, it's going to be a few years. So, why don't you use those few years to continue studying instead of planning to liquidate when we're not there yet? We don't even know what new currencies have been announced. So you ask, what event might cause, say, generally China and the East to announce their currencies are backed by gold? It could be a worldwide revolt against the dollar, which creates a vacuum in need urgently to be filled by a legitimate currency, not an African currency like the dollar. And I think the process is making tremendous headway recently. A number of nations are just lining up, sorting out their gold hoards, their giant vaults of gold, to back their currency. And what they're waiting for is some kind of a word that they're not going to get bombed by the U.S. military for their efforts regarding a solution.
Now, moving to the next viewer's question, this one is from Jeffrey Morris from England. He asks, how might the exchange stabilization funds of the nations forming the SDR basket of currencies behave as China incrementally contributes to the revaluation of gold? In what ways, if any, does being part of the SDR affect China's mutable policies?
Well, first of all, I don't believe the IMF has an exchange stabilization fund. That's a U.S. government Department of Treasury market rigging $1 trillion fund. Okay? So when China is included in the IMF special drawing rights basket, they join the dollar, the euro, the yen, and the British pound. So now add to that list the RMB. It's kind of an odd question. I'm going to change it in a way. I'm going to change the question for what is the effect overall of being part of the SDR, which is the second part. But and regarding China's mutable policies, I think what he might mean is what kind of active policies that are changing and working towards solution. How will that all be affected by China's inclusion in the IMF basket of currencies? Well, first of all, what does it mean to be included in the in the IMF basket of currencies? What does that mean? Well, it means that if there's a fund to create for, say, rescuing Bangladesh or aiding, say, Thailand, the money is apportioned according to the percentages in the basket. So the contributions will come in part from China and less so from the United States. So the money comes in from the 5 sources. Okay, that's the source. But there's another side to this. The banking systems of the world. I like to use the example of South Korea. It's one of my favorite examples because they're a powerhouse, but they're not a giant in Asia. They're just strong. They're not the leader in Asia. China and Japan are. But South Korea has a savings account. The savings account operates as bank reserve capital, and most of it is sitting in the form of treasury bonds. But they've also got ratios that conform to some extent with the IMF basket. So what you're going to see after China joins the IMF SDR basket is banking systems across the world are going to shed treasury bonds, shed euro bonds, and add Chinese RMB bonds. Okay, so the inclusion in the IMF basket means that the whole banking system across the world is going to change and tilt more toward China and move away from the dollar a little bit. And the contributions will come from those 5 countries, less so from the United States. But any contribution that comes to the United States comes from a printing press. It's not from our savings, so it's part of the problem. The printing press, I mean, we've got a whole chapter of economics, and this is like second-level economics, like 201. Pure inflation is deadly to capital. And we've forgotten this. We've forgotten it. It's passé. Oh, no, Jim, you're not modern anymore. The printing money like that sustains the economy and finances deficits. Why do we have deficits? Because we did that for the last 20 years, and now you want to do it more. We're accelerating the exact policies that destroyed our economy to rescue from the effects of what we've done in the same vein. Okay, I got off course a little bit, but to Jeffrey Morris of England, the IMF